max trade evolves, and I'll quickly just run through that for you so you can understand maybe the tweets a little bit better. The point about max is very, very simple. So let me just put this together very quickly. Max is value and volume at price. It's exactly the same as an institutional trade algorithm. It's looking for value, it's looking for volume, and it's looking for price. Now the challenge with that is a commercial trade. And because that's a commercial trade, I don't want you guys buying into that commercial trade. I don't want you guys trying to buy this trade here, for example, because obviously that's going to run quite sizable drawdowns. But Max may well be looking at this as a buyer. Max might be looking for this as a buyer. Now, obviously, what we're trying to do for you guys is to reduce your exposure without getting slippage involved. So what we're looking at is we're looking for the concept of the last supply. And the last supply that's coming in perhaps would come in for, it doesn't have to be a candle high, it could be anywhere, but we're just looking for the last real sell imbalance coming in. So let's say the last sell imbalance was the candle high here. So that's the last sell imbalance. What Max is now going to see is value, and we're getting the last supply coming in, possibly volume, yeah? Now, obviously, what we're now going to issue at this stage is we're going to have a thing called the markup test. And the MUT is now in place to try and do what? Well, the MUT is now asking whether the supply has been removed. And the reason why the MUT is asking if the supply has been removed, because that makes the trade safer for you guys. So what obviously we're now looking for is we're looking for the price to now make a decision at that MUT. The price comes up, tests for that, and at that stage, if Max is happy that the supply has been removed, when the price pulls back into the bracket, this is where we are going to be sitting in terms of order flow to try and get you guys involved in this deal. Now, obviously, but the intention is that this price should now, hopefully, at that stage, make the big break north. Now, as I said, I've had 2 of these so far this morning. And these are the 2 trades that we've had this morning based on this process. So we can see that there was the last supply came in on this candle on the far left-hand side. On the far left-hand side, you can see that large down candle. So Max is buying this process as a commercial. We then test the last supply that came in, which was right here. We tweeted that out so you guys could see it. We already got that tweet out right at the time. And when the price pulls back, now you've got your max trade. So what's going to happen is it's not a buy on a pullback, it's a buy on a pullback area. We're going to be looking for an absorption print to buy into. And what's going to happen at that stage is we should now see the market making its break north because the supply has been removed. We've already got evidence that the supply has been removed. And now we're trying to take advantage of the fact that the supply has been removed by buying into the press. And obviously the takeaway from that trade was about $1,000 per contract. Into the top edge, you can see exactly the same storyline. We've got the last demand comes in at 541. 541, the last demand comes in. So now Max is setting up a test of that. Now the first test was failed. The first test failed because the demand still showed up, right? So you can see the first test here failed. So there was still demand. The second test succeeded. The demand didn't show up. So the selling stops. When the selling stops, we start looking to sell on the pullback into the area now for the max trade. So what's going to happen is now we're going to start selling on the pullback into the area for the max sell. And then what happens is we get this amazing breakout to the downside and we start seeing that sell-off, which was absolutely crazy. So we did nearly $1,000 on the way back down again, which was obviously great news for anybody that was on the max short trade. And we went all the way back down to the max bottom edge again, all the way down to the bottom edge. So that's the 2 main max trades we've had today. That would have resulted in around about a maximum swing value of $2,000 per contract for anybody on the max program, which is obviously great news with a drawdown of literally 1 or 2 ticks, which is obviously even better news. So that's exactly how we deal, right? That's exactly how we start seeing some of these trades and missing out all the noise in the middle, waiting for value to build, putting it all together. We've just got to be patient. But when you get 2 trades like that, and it's just a pity I wasn't able to text this one out. It's just a pity I wasn't able to text this one out, and the reason why is because I was obviously away at I was away voting when this trade set up at the top edge, and by the time I got back in from voting, I'd missed out on the opportunity to tweet it. But obviously it was still a trade and it's still set up. So obviously based on the setup, it's the perfect sell-off. And again, it's almost identical to the rally in the buy side because you can see the acceleration on the sell after that demand's been removed. The acceleration is exactly the same as the acceleration on the buy trade once the supply's been removed. And that's what we're looking for. That's why we go through this process. It's not an easy process. It's not a simple process. But this is why we talk about this process itself. And obviously, the shape of it is technically a perfect trade, but obviously it still has to have value. But it also has to have some order flow. Ahmed had asked a question earlier about is it a price action signal? And part of it is a price action signal, absolutely, but it's more order flow and volume and value than particular price action. But the price action should be quite consistent because of the way the trade takes place. The price action should be quite consistent with the acceleration away from the zone. If it doesn't accelerate away from the zone, Max will just put a stop at break even and take a scratch trade. So whilst Max might be selling on the way up at some stage, it doesn't mean you're going to get a trade on that. It still has to test a demand area before you guys will start getting involved in that trade, and that keeps it safe, and that's what's important. It keeps it safe. So welcome, guys. I hope you're all good. As I said, Bank of England today. We've had also some good data from other ideas. The big short on oil has been a genius trade. Thank you very much. Not that anybody trades much oil these days. Sammy hasn't been in the room. I haven't seen him so far this morning. But obviously the trade on oil has been brilliant. We shouted it out loud and proud last night. Oil, big macro short position called several times, with the top edge look superb. And we had this brilliant sell-off this morning. Brilliant sell-off this morning. And the money was in the bank account. Early diddles. Look at the sell-off, guys. Now you may be looking at that saying, that's not a macro picture, that's a short-term micro picture. Yeah, exactly. Exactly a short-term micro picture. But if that's put in the context of a big longer-term macro, does it not give the trade more quality? Does it not give the trade more quality? What do you think? I'm tooting right, it gives the trade more quality. Thanks for asking, guys. It's a beautiful trade on the short term, right? So when we look at the short term, you say, my God, that's an absolute ripper. We've got a level, we've got a key level, we've ripped through the top edge of the key level, we've ripped through the top edge of a key level here. Now you might be saying in line with that value, we talked about this trade yesterday, we sold it, but let's take a look at the hourly charts. Remember that chart? It's called the hourly? Oh yes, let's take a look at the hourly chart for oil. And let's see if you can recognize perhaps some macro short value on oil, guys. What do you think? Anybody recognize any macro short value on oil on the hourlies? Everybody goes, oh my God, that's amazing. It is clearly visible, isn't it, Rick? It is clearly visible. And yet, there's so many people who look at it and miss it because they're not looking at the hourlies. So many people will look at it and go, I don't see what I need to see. I can't see it on a 1 minute chart. I can't see what you're talking about. It seems as if there's upside value or whatever. But we had that big macro value, which is suggesting we should be trading the oil price down towards the 63. Down towards the 63, guys. We're selling 66.5. So that's a huge opportunity to break this south, isn't it? Because if we can break this south, that opens the door to a very, very substantial sell-off through to target. Substantial sell-off through to target. And I can't think of any reason why that can't do it. Well, I can think of a very good reason why it might not do it in the short term, and that is the dollar. And one of the problems we've got with the dollar just now is we've had this short-term rip higher on the euro. We've had this short-term rip higher on the euro. And then obviously that short-term rip higher on the euro is going to cause us a few delays on the big swing off. So obviously we have to just bear that swing in mind so that we take profits. And you might be wondering why I've been so aggressively taking profits at lower prices when we've obviously got massive opportunities. Because of the rip higher in the euro dollar, that's obviously just going to bring buyers to the yard at the bottom edges. And that's what we're just paying attention to. We're just giving them enough credit to stop the price ripping to the downside too soon, too early. But this is going, if that euro dollar rolls, this oil has gone out of sight. And you'll all be sitting there saying, damn it, why didn't I sell that top edge oil at 66.5 with a put option? Exactly. So we've got the macro in line, and obviously we had the micro in line. We had to be cautious with that euro dollar this morning. But when we've got those all in line, I don't think there's anybody in the room that's looking at it now saying, nah, I can't see what your trade was. Seriously? So we've got the macro value. We've then got this 5-minute chart. Micro value creeping into the book here as well. And then we've got a top edge. We've got the right time of the day. We've got these surges in volume. We've then got a pullback, which is exactly the halfback, by the way, guys, in terms of structure. So we've got the pullback, which is right into the halfback trade level. Look at that, guys. I couldn't make it up, could I? I couldn't make up the halfback trade any better than it is, because it's exactly to the, literally to the tick on the halfback trade level. Literally to the tick on the sell. So we're top ticking it, bottom ticking it, pullback to the 50 line to the tick. And we're obviously just taking some profits because of the euro dollar bid that came in here that just stopped us making the massive profits that we were obviously hoping to make on the oil. Bonds, we did very well. Thank you very much. We've had some pretty excellent opportunities to do some business. Long bonds at the moment, by the way, guys, if anybody's on board with me. And we've obviously had to be careful around the Bank of England. We've had to be careful around the Bank of England, but let's take a look at the break-evens. This has been my bond trades today. You might be saying, why are you just long bonds? Why are you not short bonds? Well, did anybody hear what I was talking about oil? Selling oil with a massive downside opportunity in oil. Did anybody take a note of the fact that oil has that huge possible sell-off in it? Well, on that basis, should we not be long bonds? Is that not a trade that we should be busy working hard to try and be on board? Of course it is, right? It doesn't mean we can't scalp sell it, but when we're in a bank, it's very difficult to scalp sell bonds on the ultra bond in the London session because the volume's crap. It's all right for you guys. We can't get a sniff at it. We're trying to exit the bloody trade. Never mind get onto a new trade on a flip. So for me, it's a long trade and an exit, guys. Today looks like a long trade and an exit. Now let's take a look at those break-evens, that massively important storyline. Does anybody see any value for the long bond based on the break-evens? It's absolutely screamingly obvious. And obviously the exit at the top edge was the Bank of England. That's why it spikes. There was no volume up here, guys, so it was absolutely empty of any trade up here for us to do any business except walk away from the deal. So, we just have to walk away when we got the liquidity that was available, and that was us. We were finished because there was nothing up here. It's just a big empty bar. So, buying into the open, beautiful opportunity to buy the bottom edge at the open in here. We had to wait for the open to happen. This was a great price level, by the way, because it was the overnight lows. So obviously we've got the overnight lows. We then have the open. We then have the opening call, which is bullish. The opening call, which is bullish. Look at that, guys. Bearing in mind we're selling oil. So the opening call is bullish. So we're buying into this whole phase. It's not just one arrow, guys. There's a lot of arrows in here. And then we buy the pullback, which is exactly, guess what? Yes, I know you're already thinking about it. It's exactly The half-back trade again, look. Exactly the half-back trade, well, within one tick of the half-back trade. So we buy some more, take some more profits, buy some more. Bank of England spikes, read the Bank of England quickly, realize you're on the wrong trade, get away from it, spikes back down again, buy back in again. And obviously since then, you can see that this has been a very, very strong performer. Very strong performer. And we're buying back into that storyline. Now, why else are we buying back into that storyline? Because of the curve. We're obviously watching the curve at these lows, and we're trying to make sure the curve goes back for us. And obviously, you might say, why did you not buy this phase? This looks like an absolute no-brainer buy opportunity in the pullback here, the earlier pullback. And the reason for that was because the curve was actually going against us a little bit at that stage. So if we look at the shape of the curve at that stage, there's a bit of selling coming in the S's and the J's. The curve was starting to flatten down here through to 1300 hours. Well, I'm not going to buy bonds when that's happening. Neither should you be, if you've got any sense. I know it stops. I know it's a good price level, but it's still a stinkingly bad trade. What the hell are you in a buy trade there for? That's bad news. That's not good trading. So you don't want to buy that. You don't want to be anywhere near a buy on that trade. But when it comes back, and the curve has now gone bullish bonds, and the S's and the J's are now bullish bonds, and we still have some relative value in this macro, now you can now buy bonds anywhere you like. You can now buy bonds anywhere you bloody well like, and I'm right on board with you guys. We bought the whole damn area here. 20s, 21s, off bids at 19s, bids at 18s. And obviously the takeaway from that is okay. And why did we not get a bigger takeaway from that? Because we still haven't regained that pesky break evens. So when we come back up into the top edge, we are, as you would expect, we take a bit of money again. We take a little bit of cash just into that prior swing. The value line's coming back against us, so we're obviously always watching for these liquidity grabs just to get some money done. And we start watching and trying to hold on to the trade. But obviously we're now aware of the fact that it's starting to work back for us. And obviously we try to put the curve back in as well, which hasn't happened yet. So obviously what I'm watching for is an opportunity maybe to buy more back in again to this trade, but not just yet. For me, it's an exit for a profit take and a wait and see storyline. And from that wait and see, we'll just do exactly what I've just said. We'll wait and see what happens next. We'll wait and see what happens next, guys. It's been a good day, a very good day. Thank you very much. Thank you very much.